Hello, everyone, and welcome to another webinar from CIC. The webinar link has been shared on the WhatsApp group. Please join so we can start formally. As the people join quickly, we will start within 10 minutes. Thank you for joining us, who has already joined. Let people come on board. Hello, and thank you, Umber, for joining. Thank you, Justin. Parvez Akhtar, thank you for joining us. The official time of the webinar is 9:30 sharp. However, we will start as soon as the maximum people joins the group. Hello, Metab. Hello, Lizzie. Hello, Monica. Thank you for joining us. Thank you, Justin, for joining. We are welcoming you again on live webinar from CIC on the topic of risk assessment, which is based on ISO 31000 guidelines. Please note we are already using high quality equipments for voice quality, but still we recommend you to use hands-free or headgear for better reach. An assessment will be taken in the end of this webinar. Kindly listen the whole webinar carefully. As you all know, 100% marks are required to get the free certificate of CIC. Thank you. Hello once again. Many people have joined and happy to see the participation. We will start in 5 minutes. Okay, finally we are starting. I try my best always that let people join first because if somebody missed, so it's hard for him or her to pass the exam. Uh, and mostly people reach us after the examination that we missed the first part. That's why we could not succeed. But we have to follow the norms and the timings protocol. Let me start with my brief introduction. Hello, my name is Ahmed. By qualification, I'm an MBA and certified auditor and trainer for different quality and social accountability standards. I have conducted more than 300 internal, external audits and numerous trainings on different topics. Today, I will try my best to explain the concept of risk assessment with easy examples. We always try to convey by very easy examples because they are participants from different industries. So it's not possible always to give a relevant example since the background of all the participants are different. So you can relate easily if the examples are understandable. Okay, first we will go through from the content that what we are going to digest today. We will see the history, then the basic definitions, then ISO 31000 scope, risk management or treatment methods with their very useful examples or day to day examples, important terms and definitions. uh, you must know before conducting a risk assessment, it is very essential to know the important terms which are mentioned in ISO 31000 guidelines. Our today topic is based on ISO 31000, and it is the crux of the whole standard or whole guidelines. We try to manage in 45 minutes or 40 minutes presentation. Then risk assessment and some examples. Okay, we will start with the history. ISO 31000 is a generic risk management standard. It was developed by ISO Technical Committee 262, which is Risk Management Committee. The official name of this standard is ISO 31000 2018 Risk Management Guidelines. ISO 31000 is the identification number of this standard. However, 2018 is the year of amendment, or you can say the revision. 2018 is the year in which the standard was revised. As the practices keep changing, new technology is coming. So they also revise the guidelines against according to the industry practices. Further, ISO 31000 2018 was published in Feb of 2018 and is the second edition of this ISO standard. What does it mean? It means that initially it was came in 2009, the first standard or guideline published by ISO in 2009 year. Then almost after 10 years, they revised the guidelines. So today we are going through the latest and updated definition and terms which are mentioned in 2018. And you all obviously know that when the new versions comes, it cancels and replaces the older version, which is now obsolete. Okay, the topic is ISO 31000 uh, risk management. So you should know the basic definition before going to the deep. According to the ISO 31000 standard, section 3.1, risk is the effect of uncertainty on objectives. Mostly people don't know that before risk is just a hazard, or risk is the negative thing. But now after 2018 amendment, they have changed the definition of risk. They say that the risk is uncertainty. It could be positive, it could be negative. An effect is a deviation from the expected, positive or negative. Okay, let's go through some basic definitions for conducting a risk assessment and effective risk assessment. You should know the definitions or jargons which used in 2018 standard. First, risk owner. It is a person or entity with the accountability or authority to manage a risk. Who is the risk owner basically in the organization? Who is accountable or authorized or responsible to manage and conduct the risk assessment within the organization. It doesn't mean that there is a single person in the organization who is responsible. It is not possible for a single human being to conduct a risk assessment. It should be, a teamwork from every department. There should be a person who is a, risk expert or risk POC, who can give the data to the main risk owner, and the risk owner can now perform the risk assessment. The second one is risk attitude. From its name, attitude, you can correlate what would be the definition. Organization approach to assess and eventually pursue, retain, take, or turn away from the risk. The third one is risk appetite. Mostly people know this term appetite who are from the financial background. This is the amount and type of risk. What does it mean? Amount means weight. How the organization, how much the organization is in the condition to accept the risk that an organization prepared to pursue, retain, or take. The last one is risk tolerance. Organizations or stakeholders readiness to bear the risk after treatment in order to achieve its objectives. What does it mean? It means then when the risk assessment is being performed, so the remaining risk is called the residual risk, which is called the risk tolerance level of the organization. That an organization has tried their best to mitigate the likelihood and consequences of the risk, and now they have come on the level of the risk which they can tolerate, or you can say they can work with this risk level. Now moving on to the third part, the scope. It is very important. ISO 31000 guidelines applicable to any organization regardless of size, type, activities, or location. What does it mean? It means that either it's a food manufacturing company, Either it's a financial sector, either it's a hospital, either anything, it's a restaurant, regardless of anything. The number of people working in the organization, because there are organizations which have only 2 employees. So what do you think, risk assessment is not applicable? Yes, it is applicable. Further, as the name calls, ISO developed this standard. So they developed two things, which one is requirements and second one is guidelines. You should know the difference between the requirements and guidelines. Any organization which adopts ISO standard can be audited if they implemented the requirements of ISO developed standard. But any organization cannot be certified on ISO developed guidelines. In simple word, if we understand this, if an industry implement successfully and effectively ISO 31000 guidelines in their organization, still it cannot be audited by any third party, or they cannot get a accredited certification from ISO that this organization is ISO 31000 certified. Hence, an organization cannot be certified, audited on guidelines, but on requirements. As I said, this is the most important thing. You should know, any risk assessor should know that if you are implementing in any organization, so it is self-proclaimed. Moving on to the other slide, which is risk management and treatment. There are also some terms we should you should know before going into the deep or before conducting the risk assessment. There are methods or treatment methods which is defined in ISO guidelines. By adopting these 5 steps, you can mitigate your risk. These are the definition. First, I will read out the definition because it is also necessary. Then there are some examples, very easy examples, day-to-day examples. After watching this, you will, easily digest the definition. First, first method of risk treatment is avoid the risk. You can choose not to take on the risk by avoiding the actions that cause the risk. Second one is reduce the risk. You can take mitigations. Mostly people say controls, both are the same word or synonyms. Mitigations that reduce the risk. This is also a treatment method. The third one is transfer the risk. You can transfer all or part of risk to a third party. What does it mean? If you think in your organization there is a very risky department or process, for example, IT, information security, business continuity. So many organizations who think that they are not capable to consider the risk and can mitigate the risk, so they outsource this department. So what does they do? They did transfer the risk. The whole risk is transferred to the vendor level. However, the opportunities will be availed by the same organization, and there are some associated costs. Fourth one is accept the risk, also known as risk retention, is choosing to face a risk for a higher return. As you have heard already that higher the risk and higher the return, it is a perfect example for this treatment method. Organization who have capability, who have competence, who have capital, so they mostly choose the fourth option, accept the risk, because they know there is an associated opportunity with the risk, and if they choose the opportunity, they get the opportunity from that, so it will be beneficial for them. The fifth one is share the risk, is a distribution of risk to multiple organizations or departments. There is a very easy example of this 5 treatment method. So let's have a look and understand with the examples. First one is avoid the risk, as we has discussed in the definitions. Now we will try to understand with some easy examples, day-to-day examples. There is a person sitting on the couch at home. He preferred not to go out, avoiding from the accident risk. So he's sitting at home. So it is a perfect example to avoid the risk, that you can completely avoid the risk and keep sitting at the home. But there is also a problem in that, which is there is an opportunity as well. If you go out and do something, so it gives you, any reward. So mostly organization don't choose this option or avoid the risk. They, take the risk and take the opportunity as well, which is associated directly or indirectly with the objective of that organization. The second definition, which is reduce the risk. It is very also easy example, that organization normally use the mitigations and control measures to reduce the risk, but they still focus on their objective. They want to achieve their objective with mitigations and control measures. And the picture is self explanatory. The guy with the helmet is trying to mitigate the pressure of the equipment which is in front of the mouse, and still he is focusing on his objective. Same goes with the organizations. The third one is transfer the risk. As we quoted in the example, that many organizations who does not have the capability, competency or capital, they try to transfer their all risk, which is the major one, which is the higher one, to the vendor side, and they ask them to perform the process and, you know handle with the situation or the risk and get also the opportunity. So what the picture is basically doing or reflecting, that there is a hazardous thing which they are moving on to the other person. The fourth one is accept the risk, as we discussed in the definition, that organization, huge organizations, blue chip companies around the world, they rather go for accepting the risk and avail the benefits also, rather than, avoiding the risk or mitigating them to the next level. So they accept the risk and they, move on to their objective. Fifth one is share the risk, as we discussed that in the last definition. What is sharing the risk? An organization scope is to clean the floor, but they cannot stop people by walking. So what they did, they shared the risk. They said, caution, there is a wet floor. It's up to you. If you want to take the risk, then go ahead. It is a perfect example of sharing the risk. If you talk about the real organization, what they do, for example, after sales services, they clearly mention on the product there is no after sales services. So they mitigate or share the risk of after sales services on the customer end. Now moving on to the another slide, which is, I told you that some terms, important terms which we need to know, we should know before going to conducting a risk assessment formally. Let me tell you another thing, which is according to ISO 31000, as we discussed, risk is the fact of uncertainty of any objective which organization has set, and an effect is a positive or negative deviation from what is expected. Let me tell you in little deep, it recognizes that All of us people operate in uncertain world. In our daily routine life, whatever we try to achieve as an objective, there is always the chance that things will not go according to the plan. And same goes with the organization. Every step has an element of risk that needs to be managed, and every outcome is uncertain. Whatever we try to achieve, you know, any objective, we don't always get the results we expect. Sometimes we get the positive results and sometimes we get negative results. Occasionally, we get the both. If you buy a car, so definitely there is a risk of accident. There is a risk of um, incurring cost on your budget, but there is also a opportunity that you have your own conveyance. You can reach anywhere, anytime. The traditional definition of risk combines three elements. Basically, it starts with a potential event and then combines its probability with its potential severity. Normally, a high risk event would have a high likelihood of occurring and a severe impact if it is actually occurred. So I tried my best to, further define you that what is uncertainty and what is the expectation of an organization, what are the objectives, and why the risk, deviates the organization to achieve or, not achieving the objective. Let's move again to the important terms. Let me read it for you first. Context. It is also mentioned in the new version of 2018 of ISO 31000 guidelines. You know, before conducting the risk assessment, it is also should be a part of any assessment to highlight or discover the context of the organization. What does it mean? It means to establish the context means to define the external and internal parameters that organization must consider when they mitigate risk. What are the environmental effects? What are the interested parties effect on their organization? What they are saying basically is, when you are conducting any risk assessment, you should consider the context which is available in the surroundings. It could be either internal or external. For example, employees who are not working properly is the context of the organization, but it is external. For example, auditing body who comes and gives you many non-conformity and you get fail in any audit, so they are the context of the organization, which is the external context. Then likelihood, by its name, it is pretty much defined. Likelihood is a chance that something might happen. Likelihood can be defined, determined, or measured objectively or subjectively, and can be expressed either qualitatively or quantitatively using mathematics. Likelihood and consequences both are the part of conducting the risk assessment. What is likelihood basically is, with a very easy example, if you see there are cloudy weather today and there is no air, so there are the chances of rain. So it is the likelihood. What are the consequences? Let me read out the definition first. Is the outcome of an event and has an effect of on objectives. A single event can generate a range of consequences which can have both positive or negative effect on objectives. Initial consequences can be escalated through cascading or cumulative effects. What are the consequences? What we were thinking, for example, it has happened. So what will be the the benefits or the negative aspect is the consequences. For example, I thought there would be a rain today. It was a likelihood and it has happened, unfortunately. Then what are the consequences? So the consequences is the result of the likelihood which we were thinking. The last one is residual risk level, which is very important definition you should know before conducting the risk assessment. It is the last part of the assessment. Risk assessment is the risk left over after you have implemented a risk treatment option. Risk treatment options we have already understand. There are five options to treat the risk. It's the risk remaining after you have reduced the risk, removed the sources of the risk, modified the consequences, change the probabilities, transfer the risk, or retain the risk. Again, let me tell you in a very easy example what is the residual risk level. Whatever is the risk, high, medium, or low. For example, there is a risk which is high, and you apply treatment methods on the risk assessment while risk assessment, and it become medium from high. So the medium is the residual risk level of any objective. Hope these are the definitions, which is very very important. You will get the uh, content or presentation of the uh, today's webinar. So keep it with you, all the definitions, and keep reading it. So it will definitely help you while conducting the risk assessment. Now moving on to the final part, which is my favorite, risk assessment. First one is risk identification. Let me give you some example, then we will read out the definitions and clear our you know uh, understanding level regarding the risk assessment. In the first step, the risk assessment is the identification stage. It is the first stage of any risk assessment. You are responsible or required to find, understand, and describe the risk level. Remember that there is a risk is considered as something that could, prevent or even help an organization to not achieve or achieve any objective. During the risk assessment stage, it is vital to use the latest information available. What is the information means? Information means accurate data will enable the organization or the risk owner to develop the most relevant strategy. Let me give you some more examples. What you should consider while conducting a risk assessment in any organizations. There, I have some examples. Which factors you must include? It could be tangible or intangible sources, causes or events, past events which has happened with the organization. Either it's a data security threat. It could be machine broke down. So these are the events we should address, consider while conducting the risk assessment. Threat or opportunities. What does it mean? It means even possible positive risk and need to be assessed as existing capabilities for handling risk and any vulnerabilities. Resources which are available, the nature and value of such. So these are the examples which you should consider while conducting the risk assessment. Then move on to the definition part. Risk identification. What could prevent us from achieving our objective? Very very simple. If you keep it in your mind that what is the risk identification, what is the risk in the organization that can prevent you from achieving your objective, is the risk in the organization. Risk analysis. What is risk analysis? Understanding the sources and causes of identified risk. Studying probabilities and consequences. Probabilities is likelihood, which we have already understood in previous slide. Consequences I have told you earlier. Giving the existing control to identify the level of residual risk. We have already understood the residual risk definition. So what is the basically analysis? It is the combination of likelihood and consequences which multiply with each other and bring out the level of risk. There is an example. in very easy words, then you can relate with this definition in the next slide. Risk evaluation, comparing risk analysis result with risk criteria to determine whether the residual risk is tolerable or not. Risk treatment, which is, five methods: changing the magnitude and likelihood of consequences, both positive and negative, to achieve a net increase in benefit. As we got, this is a four step uh, for conducting a risk assessment. First one is risk identification, then risk analysis, risk evaluation, and then risk treatment. There are more steps which I will, tell you in the next slide while conducting a formal risk assessment. Monitoring and review, and communicating and consulting with the, stakeholders. As we have seen and studied in previous slides, that there is a method for calculating the risk. We have deeply understood the likelihood, what is likelihood and what is the consequence. So there is a formula, very easy formula, which you can put in your risk assessment, and you can know the severity of the risk, that what is the risk level in the organization for any particular objective. Mostly in a real scenario, you cannot say to the stakeholders or to the management there that there is a lot of risk in the organization. There is always a, categorization, that what are the high risk on the organization, what are the, medium risk in the organization, and what are the low risk in the organization. So this method is used to rate either the risk is high, medium, or low. So it is easy for you to communicate to the management or the stakeholders that we exist 10 risk in the organization, two are higher side, two are on the lower side, and six on the medium side. So, and it's also good for you to know that which you should consider first to mitigate. These are the tables which you follow while assigning the number of likelihood. 1 is to 3, 1 is on the lower side and 3 on the higher side. Consequence scoring, 1 on the minor side and 3 on the higher side. uh, Let me clear you one thing. It is, not a law for creating 1 to 3. It could be 1 to 5. It could be 1 to 9. So it's up to you. The criteria you should define yourself, as we studied in the first slide, that there is no limitation of, size of the organization and type of the organization. So it's also up to you that you should yourself create this, criteria. Okay, what we are telling is low, what we are assuming is high in our organization related to our practices and services and our customer type. On the left side, there is a risk rating. Again, with the example I have, so you can easily relate what is the risk rating. Just an example, what we have studied today. So, for example, there is a context of the organization which is delay in receiving raw material from ABC vendor. And if you talk about the source, so this is external, obviously, vendor are external. What is the risk involved? Again, it's a very easy example, to understand how it conducts, and you can do for your organization, whichever sector you are. So what is the risk arrives in this, objective? Customer dissatisfaction, obviously, when you are insured with the raw material, so you are unable to, complete the orders on time. Or obviously there is a reputational risk involved, since you are not providing your services on time due to any reason or vendor. So definitely there is a reputational risk involved. But again, you cannot, you know without analysis, you cannot say it's a high risk or medium risk or low risk. You have to, use a criteria or method to justify that it is high risk, medium, or low level. What is L? Basically is likelihood scoring. You have to give a scoring. Likelihood is what is the probability or chances. So you have to consider the previous experience, what has the previous experience organization has while conducting, while receiving the raw material from the vendor. So I have given it two, because there are several times that vendor is delaying the raw material, and the consequences are high when you are service industry or any manufacturing industry, where you consider the satisfaction level of any customer. So the customer related risk are always high. So I have given three to consequences. When you multiply with each other, what uh, it is six. And if you see you know the criteria on the left side, what I have told you, six is on the higher side, which says stop activity and take immediate actions. What could be the treatment method? It is also a simple example. Basically, on board, while conducting the risk assessment, the team has concluded this treatment, that on board and enlist at least three vendors for new raw material. Whole process must be completed by first working day for the following month. They have treated this by accepting the risk level, and they uh, try to reduce the risk level, the method number two. And as I told you earlier, residual risk level is the leftover risk which we have decreased from the actual risk level. So now the applying after the treatments, the likelihood is one from previously two. And again the consequences will be same if we still deliver, unable to deliver the order on time. So definitely the consequences will be high, the orders will be cancelled. So as I told you, there are two more steps, which is monitoring and review. You know, this task consists of measuring risk measurement processes. Definitely, in organization we call this document a live document. It is not a document which is signed by the management and keeps same whole the year. It's not possible because the circumstances change, the opportunity and risk change, uh, keep changing. It is very dynamic. So this document is being reviewed by the management and the risk owner and the departmental owners during the year, on different intervals, so they can decrease the likelihood or consequences, or include more risk, or you can eliminate the risk which are not associated with the industry now. So it should be periodically reviewed for appropriateness. It involves checking for deviation from the risk management plan, checking whether the risk management framework, policy, and plan are still appropriate. Given organization, external, internal context, reporting on the risk. Definitely, if you are doing this exercise, then reporting is also the part. Progress with the risk management. Finally, the last step is communication. It helps organization or stakeholders, which are the interested parties or concerns to the organization, to check that the risk management process is focusing on the right elements or the direction. So this was the brief introduction of ISO 131,000 guidelines. I tried my best to convey all the information which is possible within the time slot, and this is the time for the assessment now. So you have to check the learning of yourself, that how much you have learned from today's webinar. So CIC team will definitely share the link of the assessment and the group within 5 minutes. So you all are requested to attend the assessment as soon as possible. I think the time is 15 minutes for attending the assessment and eligibility for getting the fee certificate as well. So I welcome you once again, and thank you for joining us. Hope you had a great session. Thank you. Okay, Miss Amber, I think ask a question, and this risk assessment part of HACCP plan. Is this risk assessment a part of HACCP plan? Definitely. In any ISO standard or guideline, risk assessment is a part. Definitely, 100%. because ISO is issuing now risk-based standard. So definitely you have to conduct a formal risk assessment for even the HACCP plan. I think you asked the same question, Umar. So I have already answered. Yes, it should be a part. Basically, not the part of as a plan. Basically, planning is the first part. Assessment is the doing part. You know, PDCA cycle plan, do, check, act. So planning is the P part, and assessing the risk is the do part. If anyone has any question, we are more than welcome. FMEA is a method. Diana has asked the question that what is the difference between FMEA and risk assessment. There are a lot of methods for assessing the risk. What we have discussed today is the easiest and simplest method for assessing the risk. Like in this method, we categorize either the risk is high, low, medium. How we categorizing. So yeah, this FMEA method is different. You can also assess the risk by FMEA method, no problem. But it's our responsibility to share the easiest one. So there are every type of people who are watching this. So discussing a critical thing on the webinar, so it's mostly not valuable for them. However, it's also a very good method for assessing the risk. I hope your answer is your questions are answered very well. It's time to attending the assessment. I request my team, CIC team, to share the link of assessment. Thank you once again.